Hey everyone, this is John Feneck from the Feneck Commodities Report, and with me today is my podcast partner, Don Durrett, founder of goldstockdata.com. Don, how's it going today?
Good, John. It's time to do another show.
Yes. So we're doing this just before the U.S. Thanksgiving, and there's been a lot of volatility lately, so we'll jump into the macro in a few minutes. I wanted to start today to give our listeners kind of an update on some of the interviews we've done previously. Looking at the list here, I made for myself so I don't forget anyone. These are all 2025 interviews, so these are all relevant and recent. So in no particular order, I just spent about a half hour talking to Denarius, DNRSF. We've had Serafino on for a second time this year. They did a financing pretty close to when we were actually interviewing them. And the stock was, I don't know, around 38 cents US. It's trading at 33 cents US right now. I personally feel like there's a tremendous amount of value here because their number one project, Zancudo in Colombia, looks like it's going to be a cash flow machine in the coming couple of years. Secondly, they've got their Spanish project that's going online into production next year. So they're talking around May of 2026, which is 6 months from now. And I'm just feeling like they're going to have some other stuff going on. But if they don't, they've got two projects that are going to be going into production. One is in production already in a small way. So, Don, any thoughts, about Daenerius? I know you liked that interview with Serafino.
Yeah, I just posted an article on Substack called Concentrated Strategy. And I created three different, I call them teams.
Okay.
And the one that was the high risk speculation for 10 baggers, I included Denarius on that starting lineup. So there was 18 players on the starting lineup and 9 on the bench. And you have to basically move them in and out depending on which player is doing better. So it's basically a kind of a swapping strategy, trading strategy. But I had Denarius on my starting lineup if you're looking at like 18, if you pick 18 10 bagger speculation plays, I think Denarius fits on that very well because if they got a mill that they're getting ready to build here in the second quarter that they already bought, they're just putting it together. They got it
Right.
permitted. It looks like it's going to go online in Q2, Q3. So right now they're doing toll milling. That should get them kind of trending in a good direction. And so
Yep.
by the end of the year, Zancudo should be generating a lot of free cash flow for them. Small projects like this are never slam dunks. They always carry risk. They carry ramp up risk. But Denarius, they start trending in a good direction. This company has a lot upside. Like I said, if you're looking for spec bets, 10 plus baggers, Denarius was worth a really close look.
Excellent. So that's DNRSF in the States, DMET in Canada. Again, in no particular order, just going through a list here. Scotty Resources, you were really impressed with their news flow, which is sort of taking them from explorer to producer quite quickly over the coming couple of years. When we interviewed them, the stock was around 60 cents US. It's trading at $1.05 right now US, but it ran up to $1.30 US. And the reason it's at $1.05 is they announced another financing here, which is getting investors another opportunity to get it cheap. So any thoughts on SCTSF?
Yeah, Scotty, kind of not quite a similar story to Daenerys, but somewhat. It's a development play. Daenerys is in production. But what I like about Scotty is the valuation and the location, size of the project, the insiders, and the path to production. I think it's about 2 years out. Maybe I don't forget the exact number when they're actually going to get into
Yeah.
production. And they have really good exploration where this thing could grow in size. And so that's kind of what I always look for in these development plays. I'm always, looking, want to check all the boxes. And this is a company I think that does check all the boxes. Two of the big ones for me is the insiders. You got to have strong insiders in the development plays that want to build these mines. If they don't,
Right.
they don't want to build them, they're going to sell them. So you want to get a
Yeah.
good feeling they want to build it. I think Scotty wants to build it. Plus, I think they have a really good path to production. They've already made this deal with China, so they're going to basically take it to a port, put it on a ship, and send their ore to China. So they already have that in place, and so it's I like companies like this that get in low, and then if they can grow production, that's where we make our money. And so the exploration potential at Scotty, I think this is going to be a 3 million ounce property. It could be more, but I think it will get to three. And so you're looking at 100,000 ounce producer in Canada. That's worth a lot of money. So I like it as a kind of a spec bet. These kind of fit in my wheelhouse. I'm always trying to get my hands on mid-tier producers. So any stock that could be a potential mid-tier producer and I can get it cheap, those are what I'm looking for. So Daenerius and
Mhm.
Scotty both fit in that bucket.
Great. That's great analysis. And I just saw Brad in Zurich. I know how hard he's worked over the last 10 years to get here. And I think, like you had said, they're not going to sell cheaply. Any offer, of course, has to get put before the board. But all these names, for just listeners' benefit, we've asked the tough questions of these CEOs and leaders and said, hey, do you have 30% of the float tied up in good hands? And every single person on this list said yes. So, let's see what they end up doing. But that gives me and Don more confidence. Staying in Canada in 1911 Gold, I saw you interviewed Sean. The stock really responded after your interview. That one's AUMBF and AUMB in Canada. Could you give us a brief update there? Because I know they're getting closer to production as well.
Yeah, I'm really surprised at how harshly it has sold off. It's amazing to me. I think it's kind of emblematic of the lack of kind of sentiment in the sector. Because I mean, if you look at 1911 and you look at what it has to do to get into production, very little. It's permitted mine. They're drilling it and they're scoping it, and then they're basically planning how they're going to restart this mine. So all
Mhm.
they really need is a little bit of time, not very much money, low capex,
Right.
and gold price to kind of stay around 3,500 or higher.
Yeah.
So the risk reward in this stock remains extremely strong. So they had an issue back in a month ago. So in August, they announced a financing at like, I don't know, 25 cents US, something like that.
Okay.
And then before the financing closed, they issued some drill results. And the regulator didn't like it. They basically felt like that they were enticing people to buy the stock because, to basically participate. But who wasn't going to participate at that level? The stock was trading at like 75 cents. So
Right.
it's trading at like 75 cents US. And the regulators go, you can't put out drill results. It's like, what do you mean this thing's, you think we're gonna have trouble filling this at 25 cents? And then that was an unusual situation where the regulators said they basically stopped that financing dead in the tracks. And everybody thought there's a problem with the 1911 and the stock, it dropped, I don't know, 25% or something. But it was really a nothing burger because all they had to do was resubmit, which they've done. But the thing is that they appealed it because the people who were in the original financing, now they're going to have to pay more money, and they wanted to be
Right.
those people are like their strategic shareholders, so they didn't want to rug pull them, and so they appealed, and luckily for us, the appeal failed. So now they're doing a new financing at a higher price. And so the dilution's like half of what it was going to be. And yet the stock price went lower. The last time I looked, it
Hmm.
was under 60 cents and it was at 28 cents at Beaver Creek. I mean, as far as I'm concerned, as far as near-term producer with a good risk reward, um, it's really difficult to find something better than this. The irony is that, nobody wants to touch this thing. And like the risk is really when they turn this mine back on, what the head grade is going to be and are they going to make money? And the irony is that we kind of know because they're going to be mining the same place they were mining when they turned the thing off. This is not rocket science. They're just going back there, turning the mine back on and bringing the ore back up.
Right.
It's kind of, it's so like I said, the risk reward, it's hard to beat something like this. It's to me, I have a big enough position. I don't need to add any more, but this thing goes sub 50 cents US, I might.
Okay. Yeah, we are in tax loss season. You never know. Speaking of financings, I spoke to Kimberly Ann over at Lahontan yesterday. That one is LGCXF, LG in Canada. They did a financing at 15 cents Canadian. And the stock is trading right now at 9 cents US. So when you do the math, that's 0.1063 US was the financing price, yet it's trading at 9 cents, which, again, a cent and a half doesn't sound like much, but it's a lot in percentage terms. So this thing is trading very cheaply here. I think it's way overdone in terms of selling. When you do a financing done as a junior, sometimes the timing of it just isn't exactly as you had hoped as an exec, right? And I feel like Kimberly probably wanted to get it done a little bit sooner, but for various reasons couldn't. And it's sort of been getting hit overly hard, I think, here because of the fact that we are in tax loss selling and there has been some selling pressure in our sector. So has your opinion changed at all? I saw that in November they had some news on Santa Fe.
Yeah, Lahontan isn't the only stock that's basically not getting any love in Nevada. I mean, if you look at the valuations, P2 Gold, Borealis, then Integra. So a lot of these companies, and then there's a lot of smaller developers, even more brutal than those guys. But the only stock that's been really getting a lot of love is Hycroft, which is kind of shocking to me how well Hycroft has done. But let's go back to Lahontan here. So they have 1.9 million ounces, about 700,000 oxides. So they're going to come out with a PEA here soon. But I think that they're going to at least mine 70,000 ounces, 60, 70 to start. But I think this thing is going to grow. They have a second property, Santa Fe West, that they're going to drill that already has like a 300,000 ounce deposit. It's going to grow in size, which is going to add to Santa Fe. So if we look at this thing conservatively, the key here is they got to finance the CapEx. That's the key. It's like, I can't think the original PA was 135 and the new one's going to come out. It might go up a little bit and maybe people are worried about that. But if you look at free cash flow potential of this project, so I think it's at 1.9 million ounces. I think it's going to grow to 2.5. So I think 75,000 ounces is a very conservative target for production. And I think it'll go above that, but it's 75,000 ounces. If you look at the current margins today, current margin is $1,700. So, and I think the margins are going to expand between now and when it goes up. But if we just go down and let's just go conservative and say that the margins are only $1,000, at 75,000 ounces, you get $75 million free cash flow. That's 2x their current market cap. Their market cap today, fully diluted, 30 million. 2x. Well, if again they could easily, if they're getting those kind of margins, they could actually get more than a 10 multiple. So a 10 multiple on that, it's 75 million, is 750 million, which is kind of insane when you look at their current valuation. A 10 multiple for a company that has a big margin in Nevada is going to be very conservative. In other words, they're going to beat that, but we are going to get share dilution. And so you can, maybe you cut that in half, but if you cut it in half, you go to 375 million if you cut it in half.
Right.
That's still a 10 bagger right there. And then, okay, so the way I see it is kind of if they get financing, it's kind of a minimum 10 bagger. But if they can expand production a little bit, let's say they go to 80,000 ounces, and let's say that margins go to 2,000, right? Then, then
Then it
you know
gets
you're
even
looking
more
at
interesting.
yeah, it doubles. The upside doubles, and so
Right.
yeah. So Lahontan, to me, from a risk reward standpoint, the only risk on this stock, as far as I'm concerned, well, there's kind of two. The first one is the price of gold, of course. That's kind of the most important one. But the second one is the capex. And right now, the market's saying we don't believe you. We don't think you can finance this thing. And now that's a bit of a catch-22 for us, because if the gold price can't push up their share price, their valuation up to like 80, let's say 80 million, then it becomes harder for them to finance. And then the catch 22 is if the market doesn't think they can finance it, it never can get there. So
Mm-hmm.
they're going to be drilling some holes. Those drill holes are going to be important, and then the PEA is going to be important. And the one thing we got to be nervous about is that if the capex comes out, 150 million or above, that makes it more and more difficult to finance. And so that's
Yeah, I
kind of
think
our risk.
if that capex does get inflated, there is more risk, of course. But I think what's not being talked about here or thought about, I guess, by investors, given the amount of selling, is that Kimberly has a very deep Rolodex, like very deep. And I don't think that her intention, being a large shareholder herself, is to dilute us into the ground. Like it will be a combination of debt and equity, right? It's not straight equity. So when people look at a big number, they're thinking, oh, I mean, I just talked to US Gold. I saw them in Zurich. They're not going to do 100% equity at all, right? Like they already have a plan for how they're going to finance this. And I think that's one of the key things, Don, as we move into next year, that people aren't really, if they don't do the conference circuit like you and I do, they don't understand that gold companies in particular are going to get financed. It is going to happen somehow, some way. And somehow it's difficult. Sometimes it's difficult for you and I to see that because we have a lot of experience in the sector, right? Where people have really struggled to get the CapEx financed. But I think look at what happened with Silver Tiger just recently, right? I said on this show and other shows that Glenn needed money and they did a financing. But look at the amount of money they're raising, right? Like that's pretty substantial and takes care of a lot of their troubles, right? So
The wild card here, which is real interesting, and this is the reason why you want to own Lon, the wild card is the optionality play. So they
yes,
have 2 million ounces. They have 1.9, but they're adding more. So 2 million ounce project in Nevada at $100 an ounce is 200 million valuation. So no, and I think that price point is where we're going. So right now it's kind of ridiculous what as an optionality play that Lahontan is trading at. But if they just did nothing, if they just did nothing and just sat there, just sat on that project and waited for the phone to ring, and every time it rang and they said, "Yeah, we want to buy your project." Well, what's the offer there? Well, $50 an ounce. Sorry, call back when you want to pay 100. It would not. It's not going to be long before somebody offers $100 an ounce for a
yeah,
project like that. And so they basically are in a really, really strong situation here. So, I mean, even if they can't finance the capex, they can just slow down their spendings and get it kind of construction ready. They just slow down and get it construction ready. West Vault, they could basically do the same thing West Vault did. West Vault got their project construction ready and then and have been sitting on it ever since. And West
right.
Vault is in Nevada. It's very similar to Project Lahontan. And so
Yeah,
West Vault, they're not spending any money. They took it to construction ready and they're just sitting there waiting, being patient. Lahontan can do the
yeah.
same strategy.
I
And
hear
just
you. The US Gold team is doing the same thing. Their biggest project, while everyone focuses on Wyoming, is in Nevada, and they've just been mothballing it because they're
yeah,
waiting for higher gold prices. Right. Another one that we interviewed doing the same thing is Paramount Gold PZG.
right,
I just saw
right,
Rachel in Zurich 2 weeks ago as well. They're sitting on Sleeper, right? That has more
right.
ounces than Lahontan, just sitting there. And
Right.
Rachel's smart, Kimberly's smart. They're like, look, we're not selling this cheaply, and
Right.
I like that a lot. What are your thoughts on
I,
Paramount here? It's had a really nice run.
I, I'll go, yeah, go back to Paramount 1 second. I
Yeah,
really believe, I really believe that the price that was paid for probe for $55 an ounce that Fresnillo paid for probe, we're going to look back on this and say, man, they stole that thing. I really
yeah,
believe that development projects, especially in Canada and the US, Nevada and Canada, the development projects are going to, the minimum is going to be $150 an ounce, minimum. And I think that quality exploration plays will be going for 100. I think that's where we're going. We're going 100, 150. It's just a matter of when. The only thing we need is we just need the gold price to not go down.
yeah.
These miners are not priced at this price, at this gold level. They are not. So we have 70 right now. The average margin is $1,700. These companies are not being valued at this gold price level,
It's
and
really interesting,
I
right,
think
Don?
it's going
Because
higher.
the
Go ahead.
bankers out the big banks are telling you our targets are 4,500 to 5,000 across the board,
Yeah,
with the exception of City, which I have no idea what this analyst is looking at, but they're talking 2,500 to 2,700 by June of next year, which is absolutely hilarious. But I mean, when you think about the disconnect that exists in these gold stocks, just by looking at the numbers, I love doing this exercise with like a financial advisor. I'll cover the name Lahontan and I'll just show them the math that you just presented to our listeners, right? Just the math.
yeah,
Here's the cap, 30 million. Here's the plan, 200 million. That's a 6.5x, move, right? And they'd say, I
right.
say, would you buy that stock? And they say 100% of the time, of course. And I said, it's a gold stock. And they're like, oh, no, I don't buy gold
No,
stocks,
no thanks.
right? It's
Yeah, no, no.
hilarious. So we will see a
Yeah.
time that kind of narrative changes.
Okay, so Paramount Gold, Nevada. So, I've owned this stock forever, it seems like, because of Sleeper. We don't know how big Sleeper is going to be, but we do know it's going to be big.
Yeah,
It's a big property. It's already, I think, 3 million ounces, and they have a lot of drill holes. The thing about drill Sleeper, it's low grade. But guess what? In Nevada, low grade makes money, especially at $4,000 gold. So
yeah,
yeah, so Grassy Mountain. The reason why people never bought Paramount Gold Nevada is because Grassy Mountain's in Oregon, and they're like, I'm not buying a stock in Oregon. Forget that. Well, it turns out that Rachel really hasn't ran into any roadblocks on permitting this project. All she's ran into was, paperwork.
yeah,
Fill out the paperwork and make sure the paperwork is correct. But that's all she's really ran into. But no roadblocks. There hasn't been any resistance from government, any resistance from environmental groups, the locals. She hasn't really ran into any roadblocks. And so now we're on the downhill. She's kind of gotten the hard parts over as far as permitting Grassy Mountain. I think we're down. Now we're just going into home plate. We're sliding into home right now, and so Grassy Mountain. I mean, it's basically a 10-year, 60,000. I forget the exact how many ounces it is a year, but we're looking at like $50 million plus free cash flow a year at $4,000 gold. Well, guess where all that money's going? It's going into Sleeper. So,
right.
and I've always liked this strategy. You take your flagship over there, and you basically find a way to fund it because it's going to be really expensive to develop that project. That's exactly what Integra did. Integra is they got the Delamar project, and they go, how are we going to fund this thing? Well, let's just go buy a producing mine. They bought Florida Canyon. They're using that to fund it. This is the exact same strategy
Yep.
that Paramount Gold is doing. They got Grassy Mountain comes online. They start poking holes into Sleeper. 50 million bucks a year, you can poke a lot of holes. So I'm just hoping they don't give it away early because there's going to be a lot of people going, hey, we'll be your partner. We'll be your partner. A lot of people
Yeah.
are going to want to be the partner. And so I'm hoping that no, 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 we're going to drill this thing and then we'll call you later kind of thing. The one thing that I've realized, and I've been doing this for a long time, is in a bull market, properties become really valuable. And you get the people that own these properties and own these properties have leverage, immense leverage. In a bear
Right.
market, they have none. They have in a bear
Yes.
market, they have none, right? But in a bull market, you have massive leverage. And what you can do in a bull market, so if they hold on to this, so if we go to $5,000 gold, which I think we are going to, and margins go to $2,500, there's going to be Uber companies that want to acquire companies. That's how this business works. M&A goes nuts. Well, if you're sitting on a quality property and you have tons of leverage, one of the things that you can do, and I don't want Paramount Gold, I want want them to do it, but one of the things that they can do is they can do a 50% free carry. And initially, people are going to say, no, no, I'm not doing that. No, no way. No. But eventually, so they get turned down. First they go, let's do a 50% JV, a straight 50% JV. And so both sides pay 50-50, right? That's kind of the normal good deal. But in this environment, somebody calls up and goes, yeah, we want to do we want to buy you. Well, we're not for sale. Well, we want to do a 50% JV. They're like, sure, but it's going to be free carry. Click. They're like, no way. But in a bull market, somebody's going to go, you know what? That's not a terrible deal for us. We get 50% of the project, we get 50% of that free cash flow. And all we have to do is build the mine. We have to build it. Now, I think we're going to see some of those deals in a bull market when you have that kind of leverage. And it doesn't have to be 100% free carry, but so you open. That's where you start the negotiation. You start the negotiation at free carry, and then you go. They come back and go, well, how about 75% free carry, right?
Right.
And then you're going, whoa, we're close here. We're close. Let me go back to the board, right? And then you get an 80% free carry. There's not a lot of difference between 80% and 100. So I think we're going to see some serious, uber good deals for companies that have gold in the ground that's economic that people want.
The big if is, like you said, what type of executive is in charge here? What type of board is in charge? I see a lot of boards, not necessarily executives, that I would love to fire. Like some of these boards are just such wimps, right? Like they just, like the marathon board, like what were they thinking? Like giving up, right? The probe board, like really? Like what was it, a 16% premium? No, that was New Gold.
Yeah.
16%. Come on. I mean, no one's doing this for 16%.
No, that one made sense. The probe one made 0 sense. The New Gold made sense.
New Gold made sense, but who wins?
If your shareholders, right? If your shareholders are actually improving, it's a good deal. If you own New Gold shares, you just now became a 38% owner of a better company.
That's true.
So
that's true.
That deal worked. As a matter of fact, they took too much of a premium. They should have only did 10%. Then the share price wouldn't have went down. It wouldn't have went down, but it's still a good deal. But probe, that was pathetic.
Yeah, but then we see these kind of probe deals all the time. It's just they're not, like it really boils down to not just the CEO but the board, because the CEO is just part of the C-suite, right? Like you have to deal with all these other players.
Yeah. Sorry to cut you off, but we had a deal today, and I think it fits in right with what you're talking about. Guanajuato just acquired the Bolañitos project from Endeavor Silver for $50 million. Mm-hmm. Now, they basically sold it on the premise that the silver price, this is what happens all the time. Now, one of them is, okay, they want it. It's a good fit for them. And, what's the current market rate? So they basically gave away a project at current prices. But now, it's a project, it's a mine they're not using. It's kind of on, I think it was in production in 24. I don't know if it's not in production 25. So care and maintenance, we got to get rid of it, right? But, and we're going to get 40 million in cash, which is pretty nice. it looks like a good deal, right, on the surface. Now, Endeavor's been making real, good deals. It's hard for me to kind of question them. I questioned their project down in Peru, and now I changed my mind and thought it was a good deal. However, on this particular deal for Bolañitos, Guanajuato got the best of it. The buyer usually does get the best of it. Now, the reason why they got the best of it is I think this is going to be an easily 2 million ounce a year project. It's like 23 million ounces. So that they mined 2.5 million in 24. And there's a lot of properties, deposits on this project. So I'm saying minimum they're going to get 2 million ounces a year of production. Two. Okay, so if you value it at $50 silver at the current prices, it's worth 50 million bucks. That's all it's worth. But if you value it at $100 silver, it's worth $1 billion. $1 billion, 1B. So they paid 50 million for a $1 billion. My point is that if Endeavor would have been a little bit patient, they could have doubled they sold it for basically half what they sold it for. Because once silver prices go to 75, which I think they will next year, so all Endeavor needed to do was wait 6 months, 12 months, and they would have got twice what they paid. They would have got 100 million instead of 50. That's just my point. You're talking about, boards basically giving things away. I think they kind of gave that project away.
And you're talking Endeavor EXK, correct?
Yeah.
Yeah. So EXK and James over at Guanajuato, which is symbol GSBRF in the States, GSBR Canada, they have a relationship because James bought El Cubo from them, remember?
Mm-hmm. Yeah.
Yeah. So
James has been trying to buy this.
Guanajuato. And,
absolutely.
And investors have definitely been hurt this year by Guanajuato's financings, but now we have a clearer picture as to why, right? Like they're not raising money for just for fun. They're doing it for a purpose.
I was saying that because everybody wanted to sell Guanajuato because they just did that dilution, and they basically said, I think that they raised this cash exactly for this deal. And I said two things. Number one, I said, you don't sell a 10 bagger. It still prints as a 10 bagger. You can't sell this thing. And the second thing I said was James is a deal maker. You want to own aggressive companies. He's not going to sit on what he currently has because he knows he can't expand production. He can maintain production, but he can't increase production. So he has to do a deal. And sure enough, here it is. And it's a good deal. There's not very many silver miners, producers out there. I think last I looked, there's less than 15 with a market cap over $100 million. And it goes down to 12. It goes down to 12 if you go over 300 million. So they're basically small producers. You don't really want to own them per se. You're not going to get big alpha usually on the small producers unless they're growing. But so it's a small club, and now Guanajuato, and they all have huge leverage. And Guanajuato now they're kind of joining that club. 300 million plus growth. So I mean, we got great news today. Guanajuato, was up 12%. Basically, now they're kind of in great shape now. They're basically almost a 6 million ounce producer once they turn that mine back on. And then today, Barrick resolved their issue in Mali.
Right.
That was huge.
That's huge because that's a big part of the revs.
So all the big problems in Mali, now the problems could come back. There's a possibility that, we see more issues in Mali. But as of now, Resolute kind of resolved their problems. B2 resolved theirs, and now Barrick has resolved theirs. And I think there's one more in there. But right now, we don't have any big gold miners in Mali that have a problem right now with the government. They've all been kind of resolved. So now we see how quiet it is over the next 6 months. But the Mali government, they kind of pushed these companies up against the wall, right? They literally did. They kind of pushed them up against the wall and said, "Hey, buddy, this is the deal," right? And they pushed them as far as they could. Now, my point is now they kind of got these deals, and now let's see if they're happy. And so if they're happy and things kind of calm down, you know, if this is good for Barrick and good for B2 and good for Resolute.
Yeah, good point. Don, we'll leave it there because we have to hit our next thing. But this has been really helpful to kind of give an overview of some of these different companies we've interviewed in 2025. I'm sure our listeners will enjoy this. And thanks as always. We'll sign off here, and we'll see you on the next one. Thank you, everyone.